Hello friends, welcome to Rapics. I am Ravishankar. Today we will discuss about for whom ITR1 is applicable. But before jumping into the main topic, first let's understand what is ITR. ITR in simple terms is nothing but it is a form in which we communicate our income or loss details along with the taxes paid in a particular financial year to the income tax department. Generally, these income tax forms are not so easy to fill because department expects a lot of information from taxpayers, so forms will be little lengthy and detailed. In addition, you need to be very careful while claiming deductions and exemptions under each head to arrive at your taxable income. Anyway, we will discuss about income tax return in a separate video in detail. For the time being, we will just concentrate on ITR1 applicability. Now we will see for whom ITR1 is applicable. ITR1 is applicable only for resident individuals for whom total income from all these sources is not more than 50 lakhs. However, ITR1 is not for every resident individual. Few exceptions are there. Those we will discuss in the later part of the video. Now, to become resident, either your stay should be continuous or at least for 182 days in India during the relevant previous year. Next is your total income should come from these sources only. It can be either from one source or from all these sources. So if you are a resident individual and having salary or pension, rental income from one house property or interest income and or family pension, then you can file ITR1. One more thing is, if you have agricultural income, it should not be more than 5,000 rupees. And this ITR1 is also known as Sahaj. Please remember here the term total income and taxable income are one and the same. So taxable income means gross total income minus section 80C to 80U deductions. Now we will discuss three important points here. Please listen carefully and understand. If you don't understand it properly, you may end up choosing the wrong ITR form, which could lead to lot of complications. First one is, if you have house property income, then you can file ITR1, no doubt in it. But what if you are having a loss? In case if you are having loss from house property head, that means when you claim interest on your housing loan as deduction, then you will get house property loss. In such case, if such loss is up to 2 lakhs, then you can file ITR1. Instead, if such house property loss is more than 2 lakhs rupees, or if you want to brought forward last year house property loss, then ITR1 is not for you. You need to use ITR2 in these two cases. This is first point. Second point is, if you are clubbing either minor or spouse income with your total income, then such income which is to be clubbed also should be from these sources only. Otherwise, ITR1 is not applicable for you. And third point is, if you are getting agricultural income, such income should not exceed rupees 5,000. If such income is exceeding rupees 5,000, then you should not file ITR1. So these 3 points also should be considered while choosing your ITR form. Now let's apply this practically to understand in a better way. Imagine if you are living in India with salary income as your main source of income, getting rental income from one house property, and you are also getting interest income and or family pension, and agricultural income that you are getting is not more than rupees 5,000. Then you can file ITR1. Even for retired people also, all these conditions are same, but instead of salary, it will be pension for them. That's it. This is regarding the applicability. Now let's discuss when ITR1 should not be used. Here again two categories are there. One is, though you are a resident individual, when you should not file ITR1. This is category 1. And second one is, for which incomes or losses you should not use ITR1. If you remember, in the beginning I have told ITR1 is only for resident individuals, but it is not for all resident individuals. Meaning, even if you are resident individuals, in the following cases, you cannot file ITR1. Those are, if you are director in a company, if you are holding any unlisted equity shares at any time during the previous year, or you are having any asset including financial interest in any entity located outside India, or you are a signing authority in any account located outside India, or you are having income from any source outside India, or you are having deferred tax on ESOP, or you withdrawn cash and TDS has been deducted under section 194N on such withdrawal. That means you are covered under section 194N. And the second one is, if you are having the following incomes or losses, then you should not file ITR1. First we will see list of incomes, then we will move on to losses. If you are having profits and gains from business or profession, or capital gains, or income from more than one house property, or winning from lotteries, or owning and maintaining of race horses, or if you are having any income which is taxable under these sections, or if you are having income apportioned as per section 5A, or your agricultural income is more than 5,000. In these cases, you should not file ITR1. That means if you are having all these or any of this income, then you should not use ITR1 form for your income tax filing. Then coming to losses, if you want to claim the following losses, again you should not use ITR1. Those are any brought forward or carry forward of losses under house property head, or loss under the head income from other sources, or if you have any relief claim under section 90 and or 91, or if you want to claim any deduction other than family pension under other sources head, or if you have any claim of credit of TDS in the hands of any other person, then you should not use ITR1 form for your income tax return filing. So you need to check whether you have any of the above mentioned incomes or losses. In case if you have either of it, then you should not file ITR1. Then which ITR you should file? It can be either ITR2 or 3 or 4 depending on your nature of income. Since every time it is difficult to go through the long list of incomes or losses, I will tell you an easy way out. Don't remember when you should not file ITR1, because as mentioned earlier, it is a lengthy list and practically difficult to remember also. Instead, remember only the cases when you are eligible to file ITR. That means, as you are already aware that if you are a resident individual and having only any of the following incomes, then you can file your ITR1. Those are salary income, one house property income, or loss in case you are claiming interest on housing loan, but not carry forward and brought forward loss. Then interest income, family pension, dividend income and agricultural income not more than 5,000 rupees. One more condition is total income from all these sources should not be more than 50 lakhs. So remember this applicability scenario only. If you can remember this, then no need to worry about non-applicability scenario. Hope you understood. So let's summarize what we have discussed till now. First, we have discussed regarding the applicability of ITR1. Before that, simply we have seen what is ITR. And in later part of the video, we have also discussed when ITR1 should not be filed. Hope now you are clear about filing of ITR1. In the next video, we will understand this ITR1 applicability practically with the help of examples. Okay friends, that's it for now. If you like this video, like and share it. If you like the content, consider subscribing the channel. Thank you for watching.